TheoTrade. This is Don Kaufman. It's February 26th, 2025. Just about 90 minutes to go to the cash close here on this Wednesday afternoon. The S&P futures, right now they're massively unchanged, but we have traded in a wild range today. And I got to tell you, the markets, they are just flirting right now with the edge of the abyss. So I'm going to cover that and a significant amount more here, of course, on this Wednesday evening's video. Let's start with talking about what I kind of term in this case, that edge of the abyss. And for that, all right, we're going to go right back to major levels and what I kind of term this volatility box we've been in. So I'm going to jump immediately in the S&P futures to the 180-day 4-hour chart. And in doing so, I'm just going to kind of zoom in. Look, I'm going to make a couple of marks over here. That right there is kind of the beginning of November, obviously present time. These are literally 4-hour candles. I'm even going to let's get crazy. Let's contract adjust everything. So if it's a futures contract, we're going to go over here, adjust for contract changes, hit apply, hit OK. What that does is it makes it a continuous contract. And then we're going to apply the levels. Okay, what levels? I'm going to box this out from roughly 5,900, okay, to 6,100. Now, just real kind of rough and dirty numbers over here, but I want you to see when I'm talking about the edge of the abyss, that's it right there. And we actually did, in fact, flirt very close to the 5,900 level. The one thing that's pretty apparent looking at markets, and especially today, you try to get a bid under us and we kind of faded on the day. It doesn't look like much on the chart. You do realize the S&Ps were up over 50 points. Again, the S&Ps were up over 50 points. It's just, again, sometimes it doesn't do it justice, but you're trading, 60, 20 and change. And then minutes later, you're trading 59.50. I mean, these are huge ranges that you're actually seeing, again, on an intraday level. And although right now, and again, you got 90 minutes to go to the cash close, the S&Ps are down 9. I'm telling you, without unequivocation, okay, we're going to test into this 5,900 level. And sure, Nvidia is coming out after the close. Who cares? It's not going to make a difference. Nvidia is important. There's no question, but it's not going to change, okay, the pace, if you will, of this marketplace. And the pace of this marketplace, it's angry. Look, we've tried to rally here a number of times. I mean, really, when you start looking at this, just in the last, few hours, if you will, of trade, you've seen bids to the marketplace and sold into, and bids to the marketplace and sold into, time and again. So at this point, I think you have to assume that we're gonna trade a little bit lower, even if Nvidia comes out. It's a spectacular number. Come on, you need only look as far as like Apple. Apple today is getting absolutely pummeled to the downside to the tune of about 3%, and 3% is a pretty big move when it's Apple. Nevertheless, yes, Nvidia is coming out after the bell. And the irony of Nvidia, I've been talking about this 130 level incessantly, just nonstop, the 130 level, and have traded in and around the 130 level. And obviously we're going to pin 130 coming into the earnings, but the marketplace today is looking for just about a $12 and change move. But again, I'm actually pushing and kind of brushing off a little bit of Nvidia's earnings, because to me, there's just a lot more going on in this marketplace. And I also kind of want to deviate away from like earnings right now. Look, I know that, Nvidia has earnings and CRM has earnings, right? Salesforce and maybe eBay, a couple others, okay? Push it aside for right now, because you're seeing moves on the screen that are screaming, at least to me. And one of the biggest things, though, it's like kind of a standout here, is the advanced decline line. We're still not seeing higher degrees of correlation. And to me, that's telling. It's one of these other signs that you're like, holy crap, we're right on that edge. And the abyss is, that 5,900, because you start cracking through 5,900 inside of the S&Ps, and it just cracks the downside wide open from there. And that's a key level. There's just no question about it. Come down to 5,900. At this point, I'm pretty comfortable saying, yeah, we're going to test into 5,900. The big question mark here is if we actually start to breach through it. And that I'll be able to update more either while live, obviously here at TheoTrade, okay, or on some of the videos. But again, I'm well positioned for the onslaught, if you will, of volatility. Now, let's switch gears for just a moment. So we're just talking about levels here and testing into the 5,900. What makes me believe we're going to test 5,900 other than looking at a chart? Quite frankly, the chart doesn't do it for me. A lot of it has to do with the bond market. The bond market right here, okay, is rallying back up, which is taking interest rates lower. But you ask yourself, why are the bonds rallying? Why are the bonds? Is inflation easing? Is this going on? Look, there's inflationary numbers coming out on Friday, and I'm going to get to that as well in a moment. But I mean, I would say that the bottom line right now with the bond market, this is being used as duck and cover. It's defensive. Okay. And I think that that's notable. It's one of the reasons I'm looking at the marketplace and saying, like, look, if you're comfortable right now, you clearly are not looking at the bond market, right? It's just that's not a comfortable place. In addition to the bond market, okay, it's a lesser marketplace, but definitely makes me uneasy is crypto, specifically the Bitcoin, and this is Bitcoin futures, okay, but Bitcoin has broken substantially lower, and yet you're not feeling it, even though Bitcoin is, it's a smaller marketplace. I agree, okay, but I would expect this is going to reverberate back into the S&Ps. So it definitely appears that, trade is right now going on the defensive posture. All right, so bonds look rather defensive. There's no question about it. Now, this can change its tune pretty quick, given the fact that, forget about, again, Nvidia's earnings. I'm talking about the big data that's coming out. You got GDP coming out. Bigger than that, though, okay, it's obviously of inflationary data, which is, the Fed's indicator of choice, which is, again, it's PCE, personal income expenditures data that's coming out. Going beyond that, look at the volatility futures. The volatility futures, there's nothing to see in the chart. It's all, people, all about looking at what we term contango and backwardation. The volatility, okay, structure, if you will, has really kind of flattened out. We're still in what we term kind of a mild contango, but that's not necessarily a good thing. All I'm going to explain, because some people don't really get what contango and backwardation is, which is fine, right? All I'm really going to detail when it comes to volatility is say this. Volatility right now, and again, stop looking at your VIX, okay? Don't even bother. Volatility right now, it's not even at the angry level. The vol skew has flattened out. When I say not at the angry level, what is the angry level? It's when the March volatility futures start to exceed April, start to exceed May. And although we've gotten closer, we're not there yet. And that's what's, I think, dangerous about this marketplace. What's dangerous? Well, Bitcoin already had this dramatic drop. The bonds, I mean, there's no other way to say this, but they clearly see something. And, I'll come in here and even contract adjust the bonds because they just had a contract roll, right? Clearly the bonds see something in terms of risk. Maybe crypto saw it too, and people are ducking out of it. But the crazy thing is, it's like you're just not feeling it yet inside of the S&Ps. And I say yet, but again, I think it's important to look at this because what is it going to take for the volatility to get raging? I'll tell you exactly what it's going to take. It's going to take a test, probably through the 5,900 level. All right, so covered that. Now, you'll notice in an evening video like this, okay, I've barely discussed any individual equities. That's because everything right now relates back to the S&Ps. Okay, if we start to go into a fit of rage, crossing through 5,900, markets are going to go for heavy correlation. Volatility is going to spike, and individual stocks, okay, they simply don't matter. And that's why it's a little bit less focus on Nvidia, a little less focus on, oh, look, Meta's got a bid back under it. Well, ironically, it didn't have a down day, okay, then it didn't have an up day, and here it is. It's a bid back to it. So it's a little wild and woolly inside of Meta. But again, I'm pushing all of those aside, okay? The last aspect that really kind of comes into play, especially into the remainder of the week, obviously, is the expected move. So I want to detail this, okay, with some consideration here for the remainder of the week. This is very forward looking, right? This week, we had a $112 expected move, which means you're supposed to move about $112 higher, $112 lower. Okay. I mean, already this week, we came within 8 points of actually hitting the lower edge, which to me, that's a hit. It's a rounding error. Okay. Call it whatever you want. That's a hit. But, today we literally rallied up to unchanged and then sold back off. So again, it's kind of Mr. Toad's wild ride, but that's not what's actually got me on the edge of my seat. One of the reasons I'm saying, like, look, we're flirting, okay, with the edge of the abyss. Check this out, okay? And I think that this is the big tell in here. Look at the February 28th expiration with me. Now, as I said a moment ago, the entire week, and that was from like last Friday, the expected move was equivalent to what? Plus or minus, okay, $112. Look what's still left. Now, granted, we've already passed through. I know that we've got 80 some minutes to trade today, but we've already passed through basically Monday, Tuesday, Wednesday. All you're left with is Thursday and Friday. Okay, this is the Friday expiration, and there's still approximately $84 of movement in here. The decay hasn't really come out of these options. What that ultimately says, what it promotes, is says, strap in, risk is coming. I mean, tomorrow, we're propositioning up to a $65 move. That's the biggest expected move for a single day that we've seen, okay, this week. This week we've seen, $45, $48 expected moves, $65. And again, today is not over, okay? But we are positioning right now for a very, very significant move into the end of the week, okay? From where I sit right now, I suggest that you, ready yourself for obviously a lot of two-sided trade, but look for us to test into specifically in the S&P futures, the 5911. Look for us to test right into, again, approximately the 5911 and even possibly test through it. With that, okay, bonds could get heated out there. Obviously, the PCE data is going to be critical into Friday. But at this point, okay, I think markets are going to use anything as an excuse, anything as a catalyst for more volatility. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.